mode.
Hello and welcome. Good morning, everybody. Good morning, everybody. This is
Good
our
morning.
fortnightly market outlook webinar. I'm joined by my two colleagues, Nandish and Subash. Good morning, Subash.
Good morning, Devarsh bhai, and good morning to everyone.
How are you, Nandish?
Fine, Devarsh bhai. Good morning and good morning, all the friends. Welcome to this webinar.
Okay, so this is our fortnightly market outlook webinar where we try to give you perspective from 360 degrees from Indian markets, technical and derivatives, from global major developments, and then showcase and highlight our research. So without further ado, let's start. The most important event which happened during the week was that US government credit was downgraded by Fitch. Now, in history, these such events would have created a lot of global market turmoil. But as you can see from the screen, August 2011 also uh, S&P downgraded US markets. So at that time, US equity markets S&P 500 fell quite drastically and then later recovered. This time, nothing of that sort happened. The reason being that the reasons they cited for downgrade were very well known. It is the debt ceiling fiasco which happened last year is well discounted in the markets. So this credit rating downgrade of US government by Fitch is like Hindi film, old Hindi films police. When everything has happened at the end, they come. So nothing important importance should be given to this event. Rather, more important event which happened during the week is the era of Japanese money. Free money is over. Japanese government and the central bank, which were doing yield control till now, they have given that it is not a ceiling, it is going to be a reference rate. And in anticipation of that and beyond that, Japanese bond yields have shot up. Now, Japanese are the funder for the global markets. Many hedge funds, many global traders borrow from Japan and invest across the world. So this means that the easy liquidity which we were witnessing in last 9 years is now over. We have to be stock specific. We have to be wary of any multiple expansion now. And this is a very important event. And we will keep referring to this day over and over again in next 2, 3, 5 years. This is the day where Japanese change their monetary policy. Uh, we uh, we will come back to this in detail later, but suffice it to say for now that it is important event. Another important event which is coming from the data, and though day to day or week to week it is not very clear, but if you take a 3 month average and draw it over it, it is becoming clear that the US labor market is slowing, and that means that the US economy, which is showing quite a bit of resilience, may see some kind of a slowdown. Though it may not be a recession, but US economy is slowing down. So three key takeaways: US credit rating downgrade, Japanese easy money is over, and US economy is slowing. Now let's go to international indices. So over the last fortnight and last 1 month, this side on the screen on the this side it is last 1 month from 4th July to 4th August, and it is 21st July to 4th August of performance. Chinese markets have gone up, Shanghai and Hong Kong, because they have given us some packages for housing. Other than that, most of the markets have corrected. Indian markets have also corrected. Sensex and Nifty are down by between 1 and 1.5%, but outperformance from mid cap and small cap continues. So these smaller stocks have started outperforming from last couple of months, and that is still continuing. Over the last 1 month, if you see, Sensex and Nifty are more or less flat, while mid cap and small cap indices are up by 5 to 7%. Many stocks are even higher than that, and I will cover them in our recommendation portion. Power and healthcare are the outperforming sectors for the fortnight, while banking is the underperformer. Similarly, over the last 1 month, healthcare and capital goods have been outperformer, while consumer goods and banks have underperformed. International events. So on 10th of August, we will have RBI's important policy making decision. And on 21st of August, China will announce its interest rate decision. So these are the two important interest rate related decisions are going to come out. Other important events on 15th of August, Japanese GDP. On 16th of August, the EU GDP data will come out. And other than the routine monthly data which comes over the month is going to be announced this month. So 10th of August is a very important event for our markets. Now I'll hand it over to Subash to share his views from technical perspective. Over to you, Subash.
Good morning, everyone. Am I audible?
Yeah, you're audible. Your screen is not visible.
Can you see my screen now?
Yes,
Is my
now we
screen
can see.
visible, no?
Yes, it is visible. Go ahead.
Okay. Yeah, so good morning, everyone. So I'll be giving the technical outlook on the markets for the next fortnight. So coming to the what happened in the last week, we did correct further last week, and the Nifty began the week on a positive note, but soon broke the support of 19,563 and also closed below the 20-day simple moving average. It was the second consecutive week of losses. Market breadth was, however, positive in 4 out of the 5 sessions of the week, which indicates the positive sentiments in the broader market. So while the intermediate trend is still firmly up, the short-term trend has turned down. So as you can see on the Nifty daily chart, we have been making lower tops and lower bottoms, and this week it also broke the supports and closed below the 20-day SMA. So the short-term trend is down, but the long-term trend is still up. Now and we also observe a reverse head and shoulder pattern on the 60-minute chart. So a breakout above this neckline of 19,540 to 19,550, and also if it closes above the 19,700 gap area, would give the bulls an upper hand. So as you can see on the 60-minute chart, we have made an inverse head and shoulder. You can see the two shoulders here, and there's a head on the lower side. So if it breaks out of this neckline and also crosses the gap area at 19,700, then we could see more upsides in the Nifty. Now coming to the sectors, most of the sectoral indices ended lower this week. Top losers and underperformers were the Realty, PSU banks, FMCG, Fin Nifty, Auto and Bank Nifty indices. The top gainers were Nifty IT, Pharma and CPSE indices. We observed that while most of the sectoral indices have corrected this week, on the daily charts, we can see that many sectoral indices have found support near their 20-day or 50-day SMA and bounced back. So this is a positive signal for the near term. So as you can see in this IT index daily chart, the IT index did correct and then it bounced back from the 50-day SMA, and towards the end of the week it has also closed above the 20-day SMA. RSI also is climbing, so that is a positive signal for the near term. Infra index also is in a strong uptrend, and after the recent correction it has bounced back from the 20-day SMA, which implies that the uptrend could continue. PSU bank is one of the weaker sectors. It has corrected and broken its near-term supports and also closed below the 20-day SMA. So this sector could correct in the near term. So as I mentioned, sectors like Bank Nifty, Fin Nifty, Energy, Infra, IT and Metal have bounced back from close to their crucial moving averages and could thus move higher in the near term. The weakest sectors are Auto, FMCG and PSU banks. So these sectors can be avoided for the time being. Now coming to our outlook, as I mentioned earlier, Nifty remains in an intermediate uptrend. Short-term trend is still down. However, with the Nifty bouncing back from close to the 19,300 supports and making a reverse head and shoulder pattern on the 60-minute charts, the bulls do have a chance to make a comeback. Most of the sectoral indices too have bounced back from their crucial moving averages, which indicates a positive bias. So we will turn bullish only once the Nifty breaks out of the neckline and the gap area at around 19,700. Broad market indices like Nifty mid cap and small cap too have bounced from their 20-day SMA and could continue their uptrend. So our bullish bets would be off if the Nifty dives lower and breaks the immediate supports of 19,300, in which scenario the Nifty could be headed towards the next major supports around 19,100 to 19,000 levels. So our conclusion is that markets have bounced back from supports of 19,300 and made a reverse head and shoulder pattern on the 60-minute chart. A breakout above the neckline at 19,540 to 19,550 and also the gap area at around 19,700 would give the bulls an upper hand. So till this happens, we remain cautious. And most of the sectoral indices too have bounced from their crucial moving average supports. And broad market indices like mid cap and small cap too have bounced from their 20-day SMA, implying that there's a good chance the uptrend could continue. Our bullish bets would be off if the Nifty breaks the immediate support of 19,300, in which scenario we could see the Nifty heading towards the next major supports at 19,100 to 19,000 levels. Now that's all from my side. Now over to Nandish for the derivative view.
Am I audible?
Yes, you are audible.
Yes, Nandish.
And is my screen visible?
Yes, visible.
Okay. So good morning, friends. Again, I am going to discuss how the market is looking from the derivative side. So let's straight away jump to the presentation. During the week, we have seen short build-up in the Nifty futures. 1 minute. During the week, we have seen short build-up in the Nifty futures, where we have seen 2% rise in the open interest, with Nifty falling by 0.66%. On the other end, we have seen muted activity in the Bank Nifty futures during the week, where we have seen 0.07% rise, so almost flat, no change in the open interest, with Bank Nifty falling by 1.29%. Coming to options, Nifty open interest put call ratio rose to 1.04 levels on Friday from 0.82 levels last week. Amongst the Nifty weekly options, that is 10th August expiry, we have seen put writing at 19,300 to 19,400 levels, indicating 19,300 to 400 level to act as an immediate support for the coming week. On the higher side, Nifty is likely to find resistance in the vicinity of 19,600 to 700 levels, where calls have been written. So as you can see from this option distribution chart, we have seen call writing at 19,600 and 19,700 levels, while puts have been written at 19,400 to 19,300 levels. Now coming to FIs, we have seen aggressive short build-up by the FIs in the index future segment, where the net sold worth rupees 3973 crore, with their open interest going up by 20,000 contracts. However, if you were to see the breakup of index future segment, they have created fresh shorts mainly in the Nifty futures as of now. And that's why FI's net long to short ratio in the index future fell to 0.78 levels from 1.41 levels at which we began the August series. This ratio of 0.78 is the lowest since 20th April. So almost 3-month low, which indicates that FIs have created aggressive shorts in the index futures during last few days. So as you can see from this chart, FI's long to short ratio was 2.71 on 6 July. So they were aggressively long. Then they started reducing their longs, and during last 5 days from 1.41 to it has fallen to 0.78. So as it has reached below 1, now FIs are net shorts. So it indicates that they were aggressive longs during the month of entire July, and in August they've changed their stance and they turned bearish. So coming to outlook for the Nifty, As I discussed earlier, we have seen short build-up in the Nifty futures during the week. Call lighting at 19,600 to 700 levels. Short build-up by the FIs in the index future segment. Their long to short ratio, which fell below 1, which means they are net short. And also, after a 3 month of continuous buying, FIs turned seller in the cash market also in the August series till now. All this indicates that one should remain cautious for the market for the coming days. Therefore, our advice is to remain bearish till Nifty closes above 19,700 level on the closing basis. On the lower side, 19,300 to 400 level to act as an immediate support where we have seen put writing. Any close below 19,300 level would result into further unwinding of longs, which might push Nifty to even 19,100 to 19,000 levels. Broadly speaking, as of now, Nifty is in the range between 19,300 to 19,700 levels. Any close below 19,300 or above 19,700 will dictate the clear trend for the Nifty. Coming to Bank Nifty, in Bank Nifty, we have seen aggressive call lighting at 45,000 to 45,500, 40,500 levels. We have seen short build-up in many banking stocks, many PSU stocks, many private sector banks. So many stocks have witnessed short build-up in the banking sector and FI selling in cash market. All this indicates that in Bank Nifty, we should remain cautious till it closes above 45,500 levels. On the lower side, 44,300 to 44,500 level is going to act as an immediate support where puts have been written. Any close below 44,300 level would result into further long unwinding and also short build-up, which might push Bank Nifty to even 43,500 to 43,300 levels. Coming to sectors, there are many sectors which witness short build-up. Sectors like construction infra, FMCG, defense, and oil and gas. These 4 sectors have witnessed short build-up, so one should remain cautious in buying in these sectors. While cement is the only sector from derivative side, we have witnessed long build-up. So cement stocks can outperform. That's what the derivative data is suggesting. So that is all I want to share. Over to you, Devarsh bhai.
Okay, thank you. Nandish, is my screen visible?
Yes, Devarsh, it is visible.
Okay, so we are in a bull market and we have reached some kind of an intermediate top. As I've been showing you this graph, we started being bullish from the end of the March. We said that the pullback rally was on the cards. This was clearly highlighted in all the various strategies and on Twitter also. Then on subsequently, we said that the markets are headed higher, stronger, faster, and all markets are going to go. That was at the beginning of May. In June, July, we said that the markets are all go. We should go aggressively bullish on the markets, make hay while sun shines. Market had risen, had broken out of 18,800 kind of resistance, and we became aggressively bullish. We started issuing many recommendations on MTF and on fundamental side. More than 150 recommendations on long side have been issued. Then again, around 19,500, between 19,100 and 500, we said that those signs are becoming little, markets are becoming little frothy, we will continue with the bullish stance. Jaisa chal raha hai, chalne do, that sentence we used. And simultaneously, we gave a warning that around 19,800 to 20,000 level, become little cautious, be better to be safe than sorry. As it exactly that has played out. The complete cycle from bottom to top have been captured beautifully by our team. Around 20,000 levels, markets have started showing signs of caution and we have become cautious. So this is what we used. Around 20,000, we have to become little cautious. During this time, we have given about 78 BNPL recommendations. Many have achieved their targets. About 84 fundamental recommendations have been given, out of which another 10 have achieved their target in last 1 week. And unbelievable amount of participation and research adoption we have seen. Lakhs of shares are being accumulated, traded on research advice, and people have made good amount of money on this. Last week also we issued 4 new recommendations on the fundamental side. I have discussed them individually in a webinar. These reports are available on our website, out of which Uniparts has already achieved the first target. Other 3 are open. Similarly, 5 new MTF recommendations also have been issued, and all of them are doing quite well. For the longer term investors, we have issued DII SIP picks. Those who are wants to invest systematically, these 18 stocks are there. Every month you can keep putting money into this. Overall, longer term, we continue to remain bullish on the Indian equity. For the shorter term, it seems that the derivative side of the market, as Nandish pointed out, is becoming a little cautious. So we have to remain cautious on the derivative stocks, on margin stocks. Wherever you have large leverage positions, it is better to remain cautious. On mid cap and small cap, where we invest our own money, there is no leverage, there is no margin pressure. There, individual stocks, some stocks will continue to do well. As Subash pointed out, many of these stocks like IT and infrastructure side, cement stock, as Nandish pointed out. So IT and cement are the 2 areas where you can keep an eye for bullish trades next week, while others remain little cautious, especially on the derivative side, remain cautious. So that is our conclusion. You don't have to do much, just follow research recommendations. Our team is coming out with an excellent recommendations. The amount of calls, the highest amount of calls have been issued by any broking house in this bullish markets, and they have been fairly successful. So follow research advice. That is our humble request. So that brings us to the end of this webinar. Now we have some time, so we'll take some questions. Right. So if you have any question, depending upon the screen you are using, you should see a question mark symbol. Please press that question mark. The window will open. Write your question. It will come to us. We'll try to answer all the question as much as possible. We will not be able to answer individual position-based, stock-based question, but any other questions on our recommendation, on our research, we are happy to answer. So Prabhakar is asking us, Mr. Prabhakar is asking that the email address webinar@HDFC seems not be working. So it is a generic ID, sir. You please contact the customer care. If you have any query, write to customer care and they'll be able to answer your queries. Logesh EV is asking, can you share this PPT? Yes, we are going to share the individual PPTs on our distribution channels. You will get them. Shailesh Roni is asking, as you mentioned, PSU banks have corrected in recent downfall. Will the correct more or will consolidate? The PSU banks are looking negative from charts perspective, as Subash pointed out. So, and also from the results perspective, SBI results were a little lower than market expectations. So they are likely to remain under pressure. Longer term, after this correction is over, they can continue to outperform. Valuation wise, they are cheap. But our advice would be to buy on decline, not now, because short term it is looking weak. Salil Gupta is asking how to receive research recommendations. So please get in touch. We do issue recommendation across various forums. Our distribution team, whether it is email, SMS or WhatsApp, they will be able to help you out. Mr. Narayan, we will not be able to answer any stock specific question. Yes, Mr. Mishra, hello. Thank you, Mr. Mishra. For can we have result based calls such as, we usually don't like to trade on results. See, there are 4 times during the year results comes, quarterly results, and the volatility is very high. The kind of positioning before the results on that result day is quite unpredictable. So we have throughout the year to trade those stocks, throughout the year to invest. My humble advice would be to avoid trading stocks near any corporate announcement. The reason why we are so successful is we try to avoid such traps, and if we avoid such traps, we are successful in our trading. The bond market, see, the yields are going to go up. So we are not an expert in bond market, but across the world, the cost of money is going to go higher. That is the conclusion. The cheap, easy liquidity era is over. Multiples is going to contract over the across the asset classes. So be very careful in what you buy, whether it is debt market, whether it is real estate, or whether it is equity. It is once you are convinced, and always keep some dry powder. There could be correction. In that correction, you need to average those stocks. Mohammed Akarabuddin is asking, yes, so there is this webinar is going to be broadcasted live on YouTube. Hopefully, you will get the link on our HDFC Securities YouTube channel. Please go there and you will be able to find this webinar. We were earlier bullish on ITC, Mr. Pramod Kumar. Now it is still under our coverage, but individual stock specific queries we will not be able to answer. US ratings are downgraded, but India we don't have an issue, Mr. Bharat. India rating is steady. We have been recently also the outlook has been upgraded. There has been some improvement in India's macro numbers. So that problem India doesn't have, and that is actually positive. So India on an overall global scale is going to outperform. As we have mentioned in our monthly strategy, what China was about 10-15 years back, India is trying to get into those places. India could become the next China. All the ingredients are there, and if the political situation remains steady, and if we have 4-5 years of a continuous GDP growth, we can reach to those levels. There are a possibility that in next 4-5 years we can reach those kind of levels which you are talking about. Please connect with us. So a lot of questions are there on how to get research recommendations. Please get in touch with your relationship manager or our customer care, and they'll be able to help you. We won't be able to answer any question, especially related to HDFC Bank. So I'm not going to answer that. I think there are stock specific questions. IT sector outlook, Mr. Ashok Kumar, we are bullish on IT as Subash has pointed out. Twinkle is asking PSU stocks. So we have been giving a lot of PSU stocks as a recommendation. I won't be able to issue a new recommendation here, but there are many which we come out from time to time. Option trading recommendation, Mr. Hemant Pujara. So we come out with 2 option trading strategies and about 3 to 4 option call option or a put option trading recommendation per day. So during the week, we give about 15 to 20 option trading recommendations also. So those people who are interested in derivatives can go through those recommendations. All right. So I think I've covered most of the questions. Any closing comments from you, Subash? Nandish? Subash, any closing comments?
Yeah, so one has to be adopting a stock specific approach because the markets have already run up a lot and the uptrend is matured, and certain sectors are showing weakness like PSU banks and auto. So one should avoid those sectors and stick to the sectors which are showing relative strength like IT and metals and media, energy.
Nandish?
Yeah, so while we remain cautious for the indices, we also believe that many mid-cap small caps can do well. Many companies have announced very good results. Our economy is doing well. So for long term, our view remains positive. However, for short term, we believe that there could be a correction and that should be utilized for long-term investment.
All right. So one word advice: we have a full stake of equity commodity currency research. Use that. There are so many long-term fundamental recommendations which have given excellent returns over the last couple of months. We will keep coming out with better and more recommendations on the technical side, option side, MTF side, PSPL side, and also on fundamental side. So all you have to do is log into your HDFC Securities website, get in touch with our RM, and we'll be able to help you out. Thank you all for joining and have a great weekend. Thank you.